Recording in progress.
All right. Good evening, guys. Good morning, good afternoon, to wherever you guys are. I'm gonna begin shortly. Let's give it another 1 or 2 more minutes before we begin. For those who are here already, today's session would be on price action setups. We're gonna look at the live analysis of GBP USD for the London session. It's only going to be a half an hour session. So we're going to go through some very quick setups so that we can prepare the trades for this week or even for today. And yeah, let's just give another 2 or 3 more minutes for the rest to stream in. Okay, for those who are here already, I just want to keep on talking. Make sure that you know, we won't go into the gist of the analysis yet, but for those who just join us, we're going to go through pound dollar live analysis for today. There'll be another session coming up this week on Thursday, which I'll be taking as well. So whatever analysis that we're going to do today, we'll review it on Thursday, and make sure that, you know, like some of the concepts that I'm going to go through, you guys are familiar with it and understand how we actually go through those setups and ensure that if you were to take a positions of this, right, it is something that you understand and not based off the analysis that or just plainly off the analysis that we're doing here, but based off the understanding of how to trade the pair. Okay, my name is Sherman and my background is in algorithmic trading. So a lot of things that I'm going to talk about here today, it's largely anchored around how I go about coding my strategies. A lot of it is based off deterministic numbers, deterministic levels, so that, you know, like you can actually fully automate all these strategies. Some of the concepts that I'll be talking about today will coincide with some of the more popular strategies out there today, like the ICT concepts or the SMC concepts. Those are a little bit more visual. So we'll all be talking about the same thing, just that I will convert those visuals into numbers and how we can actually mark out certain levels on the chart if you were to code this out. Or even if you were to trade manually, how can you actually take one trade a day with at least 1:5 risk to reward ratio. Okay, so I see quite a number of people coming in already. If you have any questions, feel free to put your questions on the live chat. I will be, from time to time, I'll be looking at the chat to make sure that I don't miss out any of the questions. But yeah, feel free to drop your questions in the Q&A, and I will try to get to them. Okay. Okay, so for pound dollar, what I'll be using is a very simple indicator called pivots. I'm not going to complicate things with a lot of indicators. I'm just going to purely use a single indicator called the pivot points. And in a short while, I'm going to go through what the pivot points measure and how we can actually use them to determine certain resistance and support level. Okay. The pivot points are available on TradingView. The software I'm using today is TradingView. You can basically go to indicators and search for any sort of pivot points. Just type in pivots and there'll be a list of pivot points that surface. All of this will work, but the one that I'm actually using is this pivot point indicator called the Wayne's pivot. Okay. So what is unique about this Wayne's pivot, right? Or maybe let me just go through what pivot points are in general. Okay, so we do know that prices don't actually move in a certain direction without retracing or without an extension, right? So what the pivot points does is that based on the previous period, so for example, now I'm setting the pivot points on the daily level. Here it shows 1D, which is the daily level, right? It actually shows us certain levels that based on yesterday's movement of the pound dollar, what are the certain levels that we see today that it's off the normal range, right? So because of, so for example, if we look at yesterday's movement, which is in this rectangle box here, right? Based on this ranging movement here, right? The pivot points are projected at the start of today, Asian session, right? With the most important point being the pivot point, which shows the mean, roughly the mean of where the prices are going to be today. Okay, and based on the open, close, high and low of yesterday, we can actually plot out several other levels. Okay, so in this scenario, what we can see here today is 4 levels below the pivot point and 4 levels above the pivot point. Okay, the key ones are the 2 support levels, S1 and S2, below pivot points, because that's the support levels, they're below the pivot point, and the 2 levels above the pivot point, which is R1 and R2. Okay, and just for convenience sake, we're just going to set the lines in between the resistance level as middle level, which is M4 for R1 and R2, M3 for between pivot and R1, M2 between pivot and S1, and M1 between S1 and S2. Okay, so these are just 4 levels which we can use to gauge where prices will be within the coming day. And I'll show you a few examples as we move along on how significant these levels are and how we can actually use them to determine our support and resistance. Okay, so I just want to make sure that I'm not going too fast. You guys can catch what I'm talking about, because this will all make sense once we reach the end of the analysis. Okay. So what this points tells us is that within a given period, so for example, if you're using the daily pivot points, prices will tend to move between R2 and S2 with the tendency of retracing back to the pivot point. So say, for example, if prices were to deviate away from the pivot point at the start of today, right? As it approaches S2, the tendency is for prices to retrace back to the pivot, and it can actually move up away from the pivot again, and the tendency is to fall back down to the pivot again. Okay, so this is the first case scenario where prices retrace. Some people might call it the mean reversion method. You might be able to see a moving average, say like a 9 moving average, 20 moving average, and prices tend to always move back to the average price. Okay, same for this scenario, right? Prices, whenever it touches, so 2 areas that we will highlight here, M1 to S2, which is a point where if it touches this area, it will tend to move back to the pivot. And for an R2, if prices were to touch this area, the high probability setup will be to sell back to the pivot. Okay, so that's scenario number 1. The second scenario will be that prices move away from R2. That means it moves higher than R2, or it moves further below S2. And these are moments where prices move in an abnormal manner. So it doesn't follow the norm, it's deviating away from the norm. And those are usually the trigger days. Okay, what do I mean by trigger days? So let's take the most recent example, right, which is on Monday this week, right? So what happened to price was that it deviated from the pivot point. It went back to touch the pivot point, and it started to deviate away from S2, right? So if we were to follow scenario 1, it would actually, we would tend to wait for price to hit back up to the pivot point. But by the end of the day, the closing of that day, what it has shown us is that prices deviated away from S2, and that put us in the second scenario, right? So as the day closes, which is demarcated by this end of the box here, as the day closes, right, prices has already closed out of S2. And this scenario is basically the trigger scenario for telling us what is the prevailing trend. Okay, we can of course look at a longer time period. What is that prevailing trend here? Let's remove the pivot here, right? One other thing. So pivots can be you can look at it on a monthly basis. You can look at it on a weekly basis, on any time frame. So it's not restricted to the time frame. And prices are fractal in nature, means that if you were to do an analysis on a monthly time frame, it should work out to be the same analysis on the weekly time frame, and so on and so forth. So all the way down to the 1 minute, it should follow the same analysis. Okay, but because this session is we are looking at the London session for today, I'm going to look at more of the lower time frames, starting from daily all the way to the hourly. And the analysis will be the same, as you see, will be the same throughout. And okay, back to the point, right? Whenever prices breaks above, so I will highlight these 2 days, right? So on 28th of September, right? And on the 2nd of October, these are the 2 days where prices acted in an abnormal way, right? So prices moved above the R2 on 29th of September, showing that this is a positive or bullish move. And then on the 2nd of October, it breaks below S2 to show that it's a bearish move. Okay, so what's the significance of this second scenario? The significance of this second scenario is that whenever prices breaks above R2 and S2, what you will notice is a very significant phenomenon where this area becomes some sort of support. Okay, so in this case, when it breaks above R2, I'm just going to demark M4 to R2 based on the movement on Thursday that prices are in a bullish trend. And why are these significant levels? Okay, so it goes back to the question of what is a good support and resistance level, right? So to me, a good support or resistance level is a level when broken flips the narrative. So for example, right, if prices were to break above this level, it forms a strong support. And if this support is broken, I know for sure that it is going to flip bearish. Okay, so I can give you 2 examples here. So one example is on the daily on the 26th of September, we can see that price closes below the S2. So essentially, right, all the way up to this this week, this Monday, right, we were in a bearish trend. So we were moving down a level where we're just looking for sells, right? The direction was mainly in a sell direction. And how can we say for certain that it is in a sell direction? Will be that the most recent break of the pivots, right, was to the downside. And so for every break, a resistance level is formed. Okay, and once this resistance level is broken, it will become a support level, right? And so this is what we see. So as we break above this level, it became a support level, and prices move up. Okay, so what was the expectation coming into this daily support level was for it to bounce up again, which is from here, right? The expectation was for prices to bounce from here, and the target would have been a higher high on this M4. Okay, so clearly, there was a bounce up, and it broke below this level again. But once this level has been broken, we can kind of basically look at this whole level as a new resistance, support and resistance level. Okay, so these two levels on the daily, this level, we can forego this level because it was broken, and this was the most recent support and resistance level. So this is where we are now, with this as our resistance level. Okay, so far, so good. Any questions? I know the live stream, it's a little lagging. I just want to make sure that any questions that you guys have, please put it on the chat so that I can take a look at it. Okay. So where are we right now? We're going into the London session. We're just going to use the daily pivots a little bit more, right? And again, why this becomes if you're following the ICT SMC concepts again, this move up here forms an order block before it was taken out and broken below. Okay, so using the same concepts, because this is a support and resistance, this level here, it's a strong support level that was broken to form a new resistance level. Okay, and we are going to expect some sort of, because this was S2, price broke and closed below the daily pivot. This will be a strong daily level now. Okay, and if you follow ICT SMC concepts, this again, this was your order block here. Okay, let me just draw it here. This was your order block here, right? And if it breaks, this become your breaker block, and it forms your, and again, this level will be overlapped on the 1 hour, right? So we can just remove this and use this level, this range here, as our new range. Okay. So essentially, when we close off this pivots, it becomes clear where are we right now. Once we close above this level on the hourly, which we have about another 22 more minutes, right? 32 more minutes, right? Once we close above this level, right, this will then be our strong support level, targeting this level 1.218 level here. And we see if it's broken again, then we are on a bullish momentum. Okay. So what we're trying to do here is to this is on the daily level. We have set up the daily levels. Before that, what we're going to do is we're going to set up a support level. So again, we have confirmed that we are still on a downtrend. Nothing has been, prices have not shown on a daily level for it to be bullish, for prices to be bullish. So at what point do we think, will we think that prices will be bullish is when, for today's close, New York close, prices have to be above this level here, okay? So if prices maintain above 1.21273, we would flip the narrative from bearish to bullish. Till then, we are only looking for sells. And again, I can show you guys how we can actually remedy a failed sell on this chart, such that sells today will be a high probability setup. Okay, so we are looking at prices coming into this level here. This is our first resistance level. This is our second resistance level. So just based off the charts here, there are very little support level. And our support level for today will only be this, which has been tapped once. Okay, this is our daily support. So anything below the current price right now will be our support levels. Anything above will be our resistance level. So right now, if based on the analysis, this will trigger our first sell with the target at today's S2, and there'll be a second sell here. And if we were to break this, right, where will be the third sell for us to actually close off in a profit before prices move higher? Okay, so again, prices have to close above the red level for it to be bullish today at the end of the New York session, right? Otherwise, we are looking for sells only. The high probability setup would be for sells only. Okay, I have one question. How do you define the order block? All right, okay, so the order block, as the name suggests, okay, it's just a bunch of orders that have been accumulated and been executed at a certain level, okay? And so how do we actually identify the order block? The order block would basically be a candle, the last moving candle before a move to the upside. So just based on this, the look of this few moves, we can identify a few order blocks, okay? So this is one order block. Why this is the 1 hour order block. So within the 1 hour, right, the sells that actually enabled the buys here, again, every buy has to meet with a sell, and every sell has to meet with a buy. Okay, demand and supply has to match before prices move. Okay, so before this spike up, these were all the sells in this region, so this is a valid order block. Okay, another order block will be this big order block here. So for this, all these sells to happen, right, you need sufficient demand to actually allow for sells to happen. Okay, and then here again, there's this big push up before breaking down again. So this is your order block as well. Okay, and then here before the push up here, there's an order block here as well. Okay, so all of these are valid order blocks, right? And if you, again, order blocks are very visual. Okay, so if you're looking at 4 hours time frame, or you're looking at 5 minutes time frame, it can vary from person to person, okay? But the pivots are deterministic. Pivots are drawn out at the start of the current period. So in my case, I would usually use the pivots because there's a number pegged to that level, and it's not based off a subjective view of the candlesticks. But if you were to follow this concept using the pivots, you will realize that every level that you draw will coincide with the ICT SMC order blocks. Okay, so say for example, because of this order block here, ICT SMC will say this is a valid resistance level, and I've drawn out based on the levels that we have seen on 28th of September, right? It coincides at the same level. Okay, so all methods work, right? You just need to choose whichever that's more convenient or easy for you to use. Okay, so I will need to go through the 4 hours and 1 hour time frame. But basically, based off I'll just remove the daily pivots, and we have already drawn out the 3 most critical levels here. So if you close above the red line today, we are going to turn from bearish to bullish. But within the next session, a sell can be taken. You should have taken a sell here because there's a breaker block here, which this will be your first sell. The second sell will be here, right? And the third sell, you have to wait till the end of the New York session for the next day's pivot before you can execute it. Okay, I'll just quickly go through how that actually works. So as you can see, as price move, your next day's pivot has already been projected. Okay, but it will not be finalized till you get the last data point, which is the close of today. Okay, so you have already the pivot point set here, the M1 set here, and the M4 set here. Okay, So if we do indeed close above this red line, and you would have sold the first sell will be this order block here, targeting the daily S2. Okay. This will be your first entry. Okay. And your second entry will be this order block here, right? You can targeting the S2 here again. Or you can put half risk at this level, second half risk at this level, and the third trade to close this off in a profit. Let me see your layering. First layer here, second layer here. And based on the closing of today, the M4 might be somewhere around here, right? So that will be your third sell. And your target will be the next day's pivot. Okay. So I can give an example. So this is the same thing. This is exactly what's happening here today. Okay. So on the 26th of September, right? Because prices closed below your S2, this would have been a valid sell. But I think this was due to the news. It broke above, right? What would happen would be that the pivots on Friday would be we'll still be waiting for the close of Thursday to get the finalized pivots for Friday. So if you enter the first sell here, which let me just demarcate it by a sell here, okay. Just ignore the stop loss, because if you're layering, you do not need that point here. You have sold and your target will be M1. But because it breaks above, your next sell will be the M4, which is the target for Friday. And your target would be the pivot points, the pivot for the day. So essentially these two cells with the target here will have closed out in profit, and you would have turned bullish by then. And if you were to close these cells, which is a buy, this would be your first buy level, okay, on Monday. And your second buy level will be the next M1, which you wouldn't have reached on Tuesday, but today you have reached. So there'll be a buy here and a second buy here, right? And the target will be the M4 for today. Okay, so let me just go through the 4 hours and the 1 hour before we conclude today's trading analysis. So again, general direction for pound USD is a sell. The sell will be because of the closing on Tuesday, 3rd of October. Price had clearly told us that this is a sell momentum, bearish momentum. We'll do our first sell on this breaker block, and the second sell on this support and resistance. There might be a need for a third sell if prices breaks above this level, which will be the M4 for tomorrow. Okay, so just to reinforce this, we're going to look at the 1 hour. I'm just going to go down to the 5 minutes time frame. And again, this, because if you're going down, right now we know that these are the 2 levels to sell, where our two levels to what's the levels on the 4 hour time frame. Again, all these pivots are on the 4 hour time frame. These are the daily resistance level. This has become a support level already, and then this is our daily support. Okay, so based on the same analysis, it's fractal in nature. We're going to use the same analysis. The most recent break out of our 4 hours pivot will be this level here. Okay, so this is the level that has broken out. We are going to demarcate this as H4. Okay, so on the daily it's bearish, but on the 4 hourly it is bullish. Okay, so it doesn't mean that if daily is bearish, everything else will be everything below it will be any lower time frame analysis will be bearish as well. For us to be bearish on the daily level, we need to be bullish at these levels. So the levels are very important. So the H4 levels to take note of, based on the most recent price action, would be this level here. And if price were to hit back down to this level, and we have not taken out this resistance level, it will still be a buy. And again, if this level is broken, you can see that the next 4 block has already been created. See, the next 4 block, which gonna be finalized in the next 30 minutes. Okay, it's gonna be finalized in the next 30 minutes. The M1 to S2 is at this level, and if it's broken, which means that you will have broken this H4 level. If it does not bounce off this H4 level and it breaks below this S2 4 hours pivot, then your daily and your H4 will coincide on the bearish narrative, and this level here would be your 4 hours sell zone. Okay, so again, if you are taking a bet that prices are going to be sold off at this level, it has to come down to this level for you to buy and hit back to this level. Okay, so it's again, everything is based off probability. High probability buys will be here, targeting this level here, right? This is disastrous. Okay, so this is your high probability buy. I'm just gonna make it slightly bigger. Okay, do you want to buy here? That's a bit of a dangerous level. Okay, but this is where you want to buy. Okay, and if your buy fails, so for buys, there's no reason why you should layer your buys. Okay, because the daily narrative is bearish, right? So you probably want to set it below that most recent low that broke out of this level, and your target is here for a 1 to about 4 risk to reward ratio. Okay. So again, you can take anywhere within this range, but the best is to take the halfway point. And again, if you zoom in using your ICT SMC concepts, okay, there was some resistance formed here. It broke out. This was your breaker block. These 2 candles here on the 5 minutes. You can take half of this level here, and you target the top at 1.2191, right? You can even, if you're confident, you can even increase it to 1:8 RR. Okay, but I mean, I'm not going for like double digits RR, right? The target is 1:3. Yeah, so I'm not afraid to actually increase the stop loss, right? I know this is high probability setup for the buys, right? So you can actually increase your stop loss just to make that 1:3 reward ratio. I'll leave all this analysis here so that we can go through on Thursday as well, just to make sure that this analysis is valid, and if it's wrong, how can we actually remedy that? Okay, and then just last but not least, I'm just going to go through the 1 hour just to make sure that the 1 hour is in line with the 4 hours. Okay, so for the 1 hour, as you go down, it becomes more and more accurate in terms of like the levels. You can redefine, or you can define your levels a little bit more accurately. Again, this one, let me just make sure we're clear on this. This is H4. This is a H4 level. This is a H4 level as well. And what you can see here is that in the 1 hour that was that we looked at just now on the 4 hours, this was the 2 support levels, right? But prices did not close above R2 on the 1 hour. So all of these are actually within the price, within limits, which is condition 1. The only one that we can actually identify is this level here. Okay, this was the level that was broken, the most recent level that was broken. So prices went below S2 and closed below S2, and so this become a significant level. So what that means is that if it were to come back to this level, the expectation will be for prices to go down. Okay, but because it broke out, this becomes a H1 level. And what would we have expected would be that for price to actually do something like that. Okay, so maybe it should go up to M4, come down, and then target this M4 here. Okay. Okay, but of course, not every setup will be played out. So you would have missed this H1 buy and price just rallied. So right now, this will not be a valid level. We will rely on our H4 or daily levels. Okay. Again, this was touched, it tapped clip nicely into this level. This is your H1 level, H1 target for sales. Okay, it broke below for your H4, but on the daily, this was the target at the start of the day for sales. Okay, so I will just reiterate which are the levels that we are looking for. Buys will only happen here. For sells, we will have taken the first sell with our first target here. We market this in red for sells. Next one will be here, target here. And then on the daily level, if prices were to break above this level, your last sell will probably there is a resistance level here. Again, these are probable. See, if this resistance level here, if let's say prices would close at this level today, this would be your target. This will be your third sell. Otherwise, the most probable one would be somewhere around at this level, right? And you can actually calculate this, right, based on the closing, the last moving piece, right? You want to sell at this level, but your target will no longer be here. Your target will probably be here. Okay. And again, if you're sold early on, you will close the first two in losses. Oh, sorry. You close the first two in losses, but your last one should cover for the break even. Okay. Okay, so this is the scenario in the event that the next daily level will be taken up and the third sell will be somewhere around here. And your target point would be the next day's pivot. That means tomorrow's pivot. Otherwise, if I think there'll be news later, PMI news, right? Is it PMI news? It should be PMI news. No, S&P Global Services PMI news. Yes, correct. PMI news. Okay. So based on the news later, I would think that prices will move a great deal. If you are able to take these two sells, your target would be here. Otherwise, if prices to push above this level, the next sell would be somewhere around 1.272, which is roughly 120 pips from where we are right now. Okay, so I guess that's about it for pound dollar. I think there'll be a few analysis for other pairs in the upcoming sessions. I'll be here going through the same concepts again. So if you are not clear about what's going on today with the pivots, feel free to join me on the next few sessions. We can go through them in detail. And I think after a few iterations, you find that it's actually pretty standardized. There's nothing special about pivot points. And it is deterministic. The way that we apply pivot point is the same as how the ICT SMC concepts are being applied. And you see a lot of synergies between the two, which you can use for your trading. Yeah, so with that, I hope you guys enjoyed today's session, and I'll see you guys again on Thursday. All right, thank you. Bye.